Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. So, it is now 2 weeks after the market created a weekly key reversal down, and during that week, the market also created over Wednesday, Thursday and Friday a 3-day bearish stick sandwich pattern. Last week we saw the follow-on lower to these two patterns, with prices punching down through the lowest and arguably the weakest of the three recent congestion zones, the one between 91.83 to 91.56. Prices dropped down as far as the 50% Fibonacci line, the July 22 to May 23 move at 90.29, where they seemingly have gotten somewhat stuck. In part, I think it is due to this 50% Fibonacci line, but also I would include just below the 50% Fibonacci line the flat but important extension to the upper trend line highlighted in dark blue of the June to August 2023 ascending triangle, currently at 87.90. This proved itself earlier this year as the support that turned the market higher back in early August. In a slightly bigger picture, the October to date action had created a small bearish descending scallop pattern. This gave a primary target down in the 92.02 zone, which has been achieved, and a secondary hard to reach target X down in the 87.50 zone, around the lows of August and just underneath the dark blue neckline. Just in case we do reach there, the next support below is a small congestion band, 86.65 to 86.86, made up from the 50% Fibonacci line, the October 20 to May 23 move at 86.86, and the April 2012 high 86.65. Meanwhile, topside, we have the oft-mentioned congestion area between 93.95 to 96.06, containing the medium moving average, currently at 94.07, and the rising long moving average, currently 94.21. Now, these two moving averages are interesting, as together with the declining short moving average, currently 93.74, they just about made a bow tie formation this past weekend. Now, I am the first to say that this bow tie formation is not perfect. For example, the long moving average is heading higher, and the medium moving and short moving averages are both heading lower, but the moving averages, well, they are in the right order, so I'd pay attention to it accordingly. Thus, look at the immediate directions the moving averages are heading, which is bearish, though not overwhelmingly so, and then look at the count. By this I mean that approximately 15 to 20 sessions after the crossovers, we may see significant volatility. So that would be between approximately the 9th to the 16th of December. Something to put in your diary, but please be aware this is an imperfect bow tie formation. LME 3-month aluminium. The lack of a weekly key reversal here 2 weeks ago after a tumultuous week in many markets, seeing instead a settling for a lesser outside week pattern, fed through to last week's actions. A big move down with a big move up that sees prices back where they were today, roughly where they finished 2 weeks ago. We nevertheless initially saw last week a follow-on lower to the previous week's outside week pattern, with prices moving down through some significant levels, all the way down to the support afforded by the slowly rising medium moving average, currently 24.90, where the decline stopped dead and turned back up, with last Friday making a huge combined bullish opening long white Mariposa and bullish engulfing pattern, if only just on the latter. This drop lower achieved two things. Firstly, prices reached down to target X down at 24.98. This is the secondary hardest to reach target for the break below the October to early November bull channel. This was a satisfactory outcome. Secondly, It's set up, as I pointed out, it might last week, it's set up with a week and a half to go, the conditions for there to be a monthly key reversal here in November. Thus, if I close of business on Friday the 29th of November, we close either over 26.26 or under 26.05, then we'll be on. Anything in between and we'll have the lesser outside month. Right now we are looking borderline at an outside month to possibly a monthly key reversal up. We're right on it actually at 26.26. Funny that. So overall prices now are still held within a number of patterns, mainly bullish. In the big picture, we have the purple tines of the mid-December to late July this year bullish Andrews pitchfork, mid-December 2023 and late July this year. We are currently in between the middle tine above, currently at 27.99, and the lower tine below, currently 24.40. We also have, for the same period, a bright red shallowly bullish shift pitchfork. The market today is above the rising middle tine, currently at 25.71. Finally, we have, closer to home, a dark blue late July to early September bullish shift pitchfork, pierced above and below, but seemingly still operational. Prices are in between the overhead dark blue rising middle tine, currently at 26.68, and the dark blue lower tine below, currently at 25.35. LME 3-month lead. 2 weeks ago, I detailed a number of supports below the market at the time, as well as a resultant move that is all very significant now. And I quote, "Some of the supports below, some of them well below, Fibonacci-based congestion otherwise, between 1994 to 2002, followed by the June 23 low at 1976, which looked, how shall I put it, less interesting. Then the 2024 low in August at 1917, which I suspect is a function of the nearby 2021 low at 1908. There's also a neckline extension, that's currently at 1936, of the July 23 to February 24 head and shoulders continuation pattern. The reason I mention these supports below is that they contributed in the road in decline we saw in early to mid-September, enough that it was stopped and turned back upwards and brought about eventually a new pattern, a bright red, early August to early September bullish shift pitchfork." End of quote. Okay, so the bright red bullish pitchfork is no longer bright red and may shortly be retired completely if prices continue as they have been. Back in the middle of October, prices tramped around the middle tine, currently at 21.03, but late 4 weeks ago broke down and started testing the lower tine, currently at 20.07. Last week, the market broke down through this lower tine, as well as, and I quote, "the Fibonacci-based congestion and otherwise between 1994 to 2002, followed by the June 2023 low at 1976, end of quote. All the way down to just short of the neckline extension, currently at 1936, of the July 23 to February 2024 head and shoulders continuation pattern, where we halted and did a small pullback upwards. That only as far as the Fibonacci and otherwise congestion, though we are starting to head out between it, and that's between 1994 to 2002. In the process, the market had reached down last week to target X at 1980. This was the target below for the recent bearish halfway hesitation. Now, I also said the following 3 weeks ago about such a move, and I quote, "That is not all. As if we do get down there and continue, then please be on the watch out for 2 bearish and 1 bullish possibilities. The action from August to date could be seen as a possible large bearish cat's ears pattern, or even an even larger early July to date bearish halfway hesitation. Alternatively, it could be seen as an opportunity. It could be then an opportunity for a mid-July to date triple bottom. This is all getting very interesting." End of quote. So we are today quite possibly on the cusp of seeing which way the market will go, with 3 potential patterns. If we start moving higher, up towards the majority of the moving averages, then we may well have a triple bottom. But if we start once again in testing lower and succeeding in moving lower, say below the neckline extension below the market, then we could well have a large bearish cat's ears pattern, or even an even larger bearish halfway hesitation. All, as I said before, is very interesting.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.